DraftKings missing first quarter expectations and cutting its full year revenue forecast. Still, revenue rose 20% from a year ago. The sports betting company says a lack of March Madness upsets kept it from raising its 2025 guidance. Joining me now, Jason Robins, DraftKings CEO, and my morning brief co-host, Brad Smith. Jason, thank you for being here this morning. Let's start on the guidance. I'm really interested in getting some clarity from you on this. You said you would have raised it if not for unusually customer-friendly outcomes during March Madness. Can you break that down for us? Should investors just always expect your guidance to be driven by game outcomes?
Well, not always. I think in this case, we had a pretty historic March Madness. It was only the second time ever that all four number one seeds made the Final Four. And in addition to that, the first time ever that happened. And you had three number two and one number three seed in the Elite Eight. So really a tournament where favorites were winning. 82%, in fact, of the favorites won. So that was actually an all-time record for March Madness. So I think it was a bit of an anomaly. We've heard theories like NIL may be driving more of that type of thing in the future. So obviously the models will have to take those sorts of things into account. But I don't expect that kind of favorite run to happen most years in March Madness or in any sport for that matter. But it does happen sometimes, which is part of the great aspect of the product. Customers can really go on winning streaks on things like that, which is great.
So then let's talk about what you are anticipating regardless of game outcomes, especially for the next year here. Sales and EBITDA for Q1 did miss consensus in part due to gaming taxes, among other potential headwinds among a macro uncertain environment here. How are you thinking about the health of the consumer and the impact that could have on your business in the quarters to come?
Well, we included some material on this, and because we knew this is a question on investors' minds, we include some material on this in our earnings release. And it's pretty clear that gaming and online gaming has also really shown resiliency through macroeconomic downturns. We took some data from 2008, the Great Recession, and we saw that obviously didn't have U.S. online gaming at the time, but it was widespread throughout Europe, and it grew quite nicely through that period. So that, in addition to us looking at our own metrics and seeing very healthy customer metrics across the board, and we analyze everything, really gives us confidence that we are pretty resilient to any economic environment.
With that in mind, how's that factoring into the guide right now, Jason? And great to speak with you again, especially as we're in this period where we've heard TV ratings are strong for the NBA playoffs right now. How's that flowing through to DraftKings?
Well, strong ratings usually lead to betting and vice versa, so those are good things for us, and hopefully that'll continue. The NBA playoffs obviously has been off to a fantastic start with these games, lots of great close games. My Celtics haven't come out on top so far, but still have a lot of way to go, so we'll see. But really, it's been a great quality product as we expected, and the betting is following.
As a Philadelphia fan who lives in New York, it's been quite rough for me as well, Jason. So I somewhat share your sentiments.
I can imagine.
There. So all things considered, as you're thinking through the sports events over the summer that are going to be the key drivers for DraftKings business, as we're now in a summer that is going to be Olympic-less, but still potentially have some other major catalysts for the business, what would be those key drivers from how you're looking out into the next 3 to 6 months?
Well, obviously, baseball is a big deal during the summer. It's our biggest sport. We were really happy to see that in April, baseball was up 16% on handle year over year. Live handle was up 36% year over year. So really strong metrics on both fronts. So hopefully that'll continue through the summer. We also have a lot of great enhancements we made to our golf products, our MMA, UFC products, and many other sports that'll be occurring during the summer as well. So definitely not the most active time of year from a sporting perspective, but still a lot going on the sport calendar, and we're seeing great customer metrics.
One thing I'm just personally interested in as a markets nerd more than a sports one, Jason, is whether or not the market volatility that we saw over the last quarter is a potential headwind for your business. In the Venn diagram of sports fans that are also interested in financial markets, does market volatility that encourages some riskier investing behavior like options trading, for example, prevent you from having those customers be more active on your platform?
We haven't really seen that. It's something that we talked about. I do think there's a bit of a difference, even though I'm sure there's some overlap in the customer. There is a different segment that I think is more into that. But certainly, it's something that we are keeping in mind. And, anytime regardless of the reason that a customer has less discretionary entertainment income, that's always a factor. And I think, you can look at that across the board. But again, for us, we've really not seen, and nor has the industry ever seen, any of the macroeconomic factors out there affecting the numbers. It's always been pretty resilient to any kind of economic downturn. So I don't really expect that to be play out differently here, but it's something that, of course, we'll keep an eye on.
And I want to go back to the tax question that I mentioned earlier. Have you had any conversations with legislators over the past quarter here about what any changes to tax regulation in particular could look like going forward for the business?
Well, we're operational now in almost 30 states, so there's always going to be some of that going on in any state. We're obviously educating and helping understand that there's still an illegal market out there. There's still other options like federally regulated prediction markets. So we have to be taxed fairly if we're going to be competitive, and I think most states understand that.
As you're thinking about your average revenue per user right now, and ultimately $108 in the first quarter of 2025, 5% actually decrease compared to the same period in 2024, where do you see the opportunities to extract more values on a per user basis, knowing that users are, as Maddie was saying, being more discerning or looking across their spending and their finances and trying to figure out, how much do I actually realistically have to gamble or continuously wager versus a period where they might have a little bit more discretionary dollars?
Well, the reason that it was down was really those sport outcomes. And, that just means customers were winning, which I think is a good thing for long-term health. If you look at our handle, as we noted in our call, we were up 16% year over year, which is the amount of money wagered. So that's something that we look at more in terms of the overall spend of the customer. Obviously, outcomes can happen, and that can drag down, if you have a quarter like that, the average revenue. But those quarters, even though we've had 2 in a row now, they tend to be more of an anomaly. We haven't had a string of 2 quarters like that ever before this. So, great thing that customers were able to win, but also over time, those metrics will normalize. And we're really looking at the fundamental customer metrics, like how often are people playing? What does retention look like? How much are they spending?
And I know in the past you've talked about how sports gambling is not an investment tool, but I wonder how you think about sports betting as an investment tool going forward. Do you see this as a market for investors to really and potentially gain some revenue in their personal lives moving forward?
No, I don't think at all. I think it's an entertainment product, and people who bet don't expect to win over the long term. I think that there will be streaks like this where certainly there are customers that will make a lot of money, and that's a good thing. But I don't think people should look at it at all, and certainly don't as a long-term investment tool. Certainly it's an entertainment product.
All right, Jason, thank you so much for making the time for us this morning. Jason Robins, DraftKings CEO, and our own Brad Smith for the conversation as well.